I like to say start an LLC because LLCs are flexible entities. You can pretty much start as an LLC, go over to an S corporation. You can go over to a corporation, and it's the only entity that can do that. You can't do that with a corporation. What you'll do is you'll open up your LLC. What you're now going to do is now your expenses, right? You're now a contractor. So your travel to work that wasn't a deduction is now a tax deduction. Your phone, your laptop, all the things that you're spending money on is now tax deductible. The tax code, it's all about you knowing what you can do, but also making sure that you follow the process. You're actually conducting business. You're actually keeping your documentation. You keep your records. You know, those are the things that's really, really important.
He was all over the papers, Donald Trump, when people were flipping out. He never paid taxes for years. And everybody's in the comment, he needs to be in jail. He needs to be in jail. But behind my head, I'm like, how's he getting away with this?
Wealthy people don't pay taxes all the time, right? They pay a low amount of taxes all the time because they understand the tax code, so they allow their movement to dictate the things that they do in order to reduce their taxes.
Somebody dies, right? And they owe tax. Who's responsible for it?
If you owe taxes, Aretha Franklin owed $8 million in taxes when she died. Aretha had no trust in place. Aretha had nothing in place. She literally had stuff stuck in a couch in terms of how she wanted her son to be taken care of and like how to distribute her assets. That's wild. Think that she basically had access to so many professionals, right? But it's not about, again, guys, it's not about knowing what you can do. It's about what you're going to execute on. So you have Aretha Franklin. She passed away. She owed $8 million in taxes. Guess what the IRS did? Knock, knock, knock to her estate. You guys can't distribute anything until we get paid first.
So welcome back to another episode of Motion and Success. My name is Cody Brown, and I have my co-host with me.
Yup, it's Ayo, and we back with another episode, bro.
Listen, Ayo says this is another special guest, but I actually agree. Not to say everybody else wasn't a special guest, but I think this is going to be a great episode. Reason why is because this is an episode where Motion and Success meets Shaquanna Brooks, aka Miss Business. She is an accountant, also a CPA. She is the go-to lady for everybody, like that almost everybody knows in the Instagram streets, you know, the big popular people, the big businesses. So this is going to be a great conversation for sure. And like Ayo always says, this is one where you got to take notes for, because she's going to be clearing stuff up where people be tagging weird people in the comments, you know? So we going to have a real conversation on today's episode. So Shaquanna, go ahead and introduce yourself. Tell the people a little bit about yourself.
Well, hello, everyone. First, thank you guys for having me.
Thank you for coming.
Of course. And we're in Brooklyn, my hometown.
You
so
already
you see,
know.
I'm repping New York. So shout out to all the people that are from New York.
Yeah.
So quick backstory about who I am. So as you mentioned, my name is Shaquanna Brooks. I am a CPA. I'm the CEO and founder of Brooks Alliance. So Brooks Alliance, we do the taxes for all the who's who's. So celebrity clients, influencers, entrepreneurs. So outside of it just being like, oh, I'm just doing taxes for entrepreneurs for influencers and celebrities, I have 3,000 clients, right? So my firm, Brooks Alliance, we service 3,000 clients. So that's small business owners, real estate investors, entrepreneurs, freelancers, just helping everybody really understand how to approach taxes. So I started my career out, one of the top accounting firms in the world. I stayed there for about 6.5 years. And I realized, like, of course, as we always do, it's like, all right, I got to figure out what I'm going to do, right? Like, am I going to stay in corporate or am I going to, deviate and start my own business? And so I decided to start my own business, which I realize now it was second nature to me. And it was second nature to me because I grew up in a business. So I was fortunate enough to grow up in a small business. So I watched my dad, he owns restaurants here in Brooklyn, New York. So I've watched him open restaurants, close restaurants, hire, fire, deal with vendors, deal with contractors. So the entire time I'm not realizing like I'm a daddy's girl. So I wanted to I started working at the age of 6. Okay. So I always say it's kind of time for me to retire. I always make that joke because I'm like, yeah, based on the working clock, it's probably time for me to retire. Right. I've been working since I was 6. But the great thing is that by the time I was 15, I knew how to run a business. Right. So I went corporate because I wanted to understand like, what are they doing on a higher scale, right? Like, what are they doing? How are these big buildings getting built? Where's the money coming from? And so the best way to do that was accounting. So I did decide to start my accounting career. And again, it was time for me to make that decision.
Yeah.
And I knew, I was like, okay, well, small businesses are in trouble because I'm watching everybody on social media and they're like, oh, this is how you make money. This is how you make money. This is how you make money. But nobody, not one person when I got on social media in 2017 was talking about, oh, if you're not careful, the IRS will come and snatch up 50% of that. Right? So, and I always tell people, like, if I asked you for 50% of your business, you will be highly offended. But you don't take any action or you don't seek additional knowledge as it relates to taxes because, you're taught to be afraid of the IRS, but you just, it's more so what you don't understand. So I said, okay, opportunity, right? I'm like, I have to bet on myself. The worst thing that could happen is I have to go back to corporate, right? But at least I can say I tried.
And you have your credentials.
I have my credentials, right? I'm a CPA. I have my credentials. So I knew the worst case, scenario is I'll be able, I'll have to go back to corporate. But I said, okay, I'm going to start this. Started in 2017, left corporate in 2018, 2019, just to speed this up. 2019, I was on EYL. I was their first guest. So I was the first guest on EYL. That was amazing. So it has been amazing. They're my clients. So it has just been amazing, like watching them grow and like, seeing everything flourish. It has been amazing. So bring up being on EYL in 2019 because that exploded my business. Like exploded my business to the point where I was like, whoa, hold on. Like I cannot keep up. Like I cannot keep up.
And that's when they just started, 0 subs, 0 views.
No. So Rashad had views. Like Rashad was on social media. Like he had heavy engagement. Like he had heavy engagement. He was already on there like educating. When they had I think they were 7 episodes. I think I was episode 8. So they were already doing episodes for Earn Your Leisure. I was just the first guest.
Okay.
So I was the first guest and it has just been up from there. Like it has just been amazing. That year I may have gained like 1,000 clients. So imagine that, right? Like I've started my business, yes, but literally, you're dealing with so much. So from there, listen, I just dedicate like every single day. I wake up and I am enthusiastic. I am passionate about helping people save on taxes, right? That's my thing. So that's, a little bit about me and my why and how I got started and, why I even got into this. But I really think it's very important for people to understand how to save on, like you need to understand it. Wealthy people understand it. And so it's time for us to understand it. So that's my why and who I am.
That's really, really impressive. So why'd you go into accounting versus any other field like, being a doctor, physical therapist, psychiatrist? Why'd you go in that field?
Funny story. So
or being a lawyer.
I am a person, I love numbers, always have loved numbers. So lawyer was out the question. I don't like arguing my point. It's just like, I just don't, right? So that wasn't a career for me. But to be very honest, so my associate's degree is in biology. I was going to be an anesthesiologist. So I was on the path to go be a doctor and I enjoyed it. But the reason why I switched from being an anesthesiologist because I realized like I didn't enjoy it. Like I didn't let me not say I didn't enjoy it. I enjoyed it, but I didn't love it enough like how I love business. And so as I was going through my career, I am queen pivot. You do not like it, you pivot, right? You have one life. The least you could do for yourself in this one life is say, listen.
What's going on, my Motion and Success family? Sorry to break the interview, but I had to. I just wanted to share some information with you guys because I know there is a problem. A lot of people out here, they're struggling with their credit. They're struggling to get funding. They're struggling to close a real estate deal. They're struggling to go ahead and increase their credit score. They're struggling to remove inquiries off your profile. I have the solution for you. So now what I went ahead and did was I created an AI powered software that you can use to go out and repair your own credit, not only your credit, but also your family members' credit if you wanted to. So the name of the system is called M2Magnate.com. This is an AI powered software that you can use that will generate all the letters for you in less than 5 minutes. And you can send out your letters throughout the software to get the results. This is the same exact system that's responsible for helping me remove negative items off my client's credit profile, my credit profile, and this is what's going to help you to get that 700 plus credit score without having to pay thousands of dollars. Go ahead and visit m2magnate.com and start working on your credit. See you guys inside the software.
I'm going to try to do whatever it is that I want to do, right? So I switched over, and my school had a really, really good accounting program. So it was more so like, okay, am I going to do finance? I'm going to do accounting. I'm going to be around. I wasn't like, oh my God, I have to do accounting. It was like, all right, I'm more of an opportunities person. Like, I'm going to set myself up for success. So my school had a better accounting program. So why not do accounting, versus like trying to struggle and figure it out. And network is everything. My best friend was an accountant and already working at one of the top accounting firms. So she's like, look, do this, go to this conference. This is where they interview. This is where they hire at. Do this, do this. You need to make sure that you have your internship, because most people, when they're in college, they're looking to do their internship in their senior year. You can't do that. You already need to have a job offer in your senior year. So you need to be doing your internship in your freshman year and your sophomore year, like that second year of college. You can't do it in your senior year. It's already too late. Everybody already got their jobs. So she put me onto that. And I was like, okay, I am good. You give me the blueprint, I'm following it. You give me the blueprint, I am following it, okay, every single time. So that was how I got into accounting. And for me, I have to do the top of whatever it is I'm doing, right? So when I got in accounting, not all accountants are CPAs, right? So when I got in accounting, I was like, all right, well, in order for me to be an accountant, I need to get my CPA, because I can't just be an accountant. I have to like go to the highest level of whatever it is that I'm doing. And so like CPA is like one of the hardest exams after the bar. It's like like right after the bar is the CPA exam. And so I studied for it, and listen, I passed, and here we are today. But yeah, so that's my journey. I have done real estate. I love real estate. So that's why I love to combine real estate and taxes. I love the conversation. I've done real estate sales, because in my mind I was going to be selling homes, but New York homes is too tiny. I really didn't believe in them. So because I didn't believe in them, I was like, I kind of fell out of love. And I was young. I was like, and that was around the time the market crashed. I was like, okay, I'm going to get up out of here. I'm going back to school. Like, y'all seem stressed around here. I'm going back to school. So that's pretty much my journey. I am queen. Like, I am going to pivot. And I think that people have to understand that and be okay with it. Because sometimes we're like, oh my God, I spent so much time doing this. Okay, if you spend another day, then you're going to spend another day doing that, when you could have spent another day, going towards another path. So that's my story.
That's a great backstory, because even when you mention like leaving corporate, a lot of people, they get comfortable with being in corporate. They try to climb the corporate ladder, and then they just never leave, So the fact you saw corporate as an experience to start your own firm, and then, building your own thing, that was something that a lot of people don't do. So I see what you mean by definitely by pivoting. But for me, like when I was younger, you don't really got a sense of money. And then adulthood hit, and I'm like, taxes, letters from IRS come. And then my parents used to get letters from the IRS, and they used to be scared as hell. And I'm wondering, like, what's going on? Like,
nobody wants drama.
Nobody wants.
And you shouldn't. You shouldn't. They will come for your assets.
Definitely not. So throughout your experience, being an accountant, what is one thing that gives you like that sense of purpose and fulfillment, like when you're helping people, do their taxes, helping them save money? Like, how do you feel when you're doing things like that?
So I feel amazing, and I'll just give you guys a little bit of understanding why. I was in corporate, and I had to make a decision on what I was going to do. Oh, at the time, I also had a clothing company, right? It was kind of like Fashion Nova. So if I would have stuck to it, I would have been a Fashion Nova, right? Of the world. Stick to your dreams, right? But so Fashion Nova, not Fashion Nova. So I had the company, and I had to make a decision like, hey, am I going to kind of continue in the company? I'm at corporate. I need to make time to actually study for my CPA. So what I did was I sat down and I wrote down a list of all the things that I wanted to do. And I'm going to tell you all the things that I wanted to do. I wanted to do real estate. I wanted my CPA. I wanted to help people because and I looked at like things that I was already doing. I wanted to help people. I wanted to host parties, but that meant that I was going to be a party promoter.
Networking parties too.
I was going to be a party promoter. And then what else? I said help in real estate, CPA, and what else?
Fashion.
No, not fashion. I actually don't like fashion, but I'm amazing in business. So I don't care what business you put me in, I'll kill it. So I don't love fashion, but I love business. So it doesn't matter the business, I'll kill it. But so I wanted to do those things. So just to kind of go back to my journey, right? I studied for my CPA. I stopped the fashion company. I studied for my CPA. I got my CPA when it was time for me to leave. And I started my company, Brooks Alliance. Now, in terms of Brooks Alliance, of course, I'm educated under Ms. Business. So now I'm Ms. Business. But now what I get to do is I get to help people. I have my CPA. I get to help people. In terms of being a party promoter, I throw the best parties, right? For exclusive parties for influencers. I do exclusive parties for my clients. So now I got to incorporate that. And now that I have generated the money in my business, now I'm investing in real estate. So for me, what I do is I get to do what I want to do, like, and what makes me happy and a part of my plan. So there isn't one box in terms of the things that I wanted to do that I haven't been able to fulfill. So in regards to like the fulfillment of it, I feel like my piece, so that's a fulfillment for me. When it comes to my picture, my bigger picture, it's more so about me looking at people and being like, I'm a part of you being able to build wealth. And so that's how I take it, because I haven't built my firm in a sense of, oh, I'm just doing your taxes, right? I'm not a tax preparer. I'm a tax strategist, right? There's a difference between the two, right? So there's a big difference between the two. So I'm sitting here and we're aligning different things. We're not just looking at, oh, your taxes. No, we're building a plan for you. We're building strategy for you. So we're looking at your retirement. We're bringing in professionals to, talk about your retirement, to talk about your assets, to talk about your your trust, right? So bringing an attorney in, making sure that you have a trust in place, bringing in somebody from insurance. It's all pieces to this puzzle. And I tell everyone, if you follow all the pieces to the puzzle, of taxes in terms of how to save on them, it's no way you will not be able to, become wealthy and save more of your money and keep more of your money. So for me, I feel like my piece is so important, because if I don't educate you guys on how to save on taxes and the pieces of the puzzle of it, then what happens is that you're giving away 50%. So if you taking 5 steps back every time you have to give away 50%, and somebody that's saving 50% taking 5 steps forward, y'all now have a 10-step gap between you guys.
Right.
So now it's, now it's a situation where I look at it as, this is my contribution. Like, this is my contribution. This is how I, help the community, and just in terms of being able to be like, listen, this is what you need to do. These are the steps. This is how you execute it. So I love it. I don't know. I know I'm crazy. Like, nobody loves taxes, but I love taxes, because I'm like, this is my vehicle to like help, So that's why I love it.
So I have one question. So like, as far as strategy, right? And I don't know if this is something that you probably get asked a lot. Like, is it an actual tax strategy? Say, for example, a person is working, because you did mention a person that's working a 9 to 5, like not necessarily a 9 to 5, but you're working and you're getting taxed about 50% or whatever the case may be. And another person is not paying 50%. Is it a tax strategy? Say, for example, if you're working a 9 to 5 and you have a small business, can you have your income be deposited into your small business account, so that way it looks like your business is generating revenue, like when you're just starting?
No.
Is there like,
let me just explain that, because I love that you said that, because a lot of people are they don't understand that when you are contributing your own money into your business, it's not looked at as income. right? So they're never going to look at it as income, right? Because you're not going to pay taxes. You're not going to pay taxes on your W-2 income and then put it in your business income and then pay taxes again, right? You'll be crazy. I'll knock you out if you do that.
I probably would.
No, see, no, this is why we're here. This is why we are here. When you deposit money into your own bank account, right, and it's your money, then what happens is that's just a contribution into your business. That is not considered taxable income. So let's just say if you're like, hey, I want people to think that, I'm making money. They will know, right? It may come from like your job. Like, let's just say you're going for a loan, right? They're going to ask for your taxes. They're going to see, where you work. It's a contribution. You're not paying taxes on that money. So to that, no. But
sorry to cut you. Or can you register your job as a 1099 worker? And then
so
I've
that's
heard
more
stories like that.
That's more in regards to the line of work that you do.
Okay.
So if your job does give you the option of either being a contractor or being a W-2 employee, sometimes people are W-2 employees and their niche is so specific to the point where it comes down to now you are 1099. So now let me just break down to my people that are 1099s. Well, whether you are a 1099 or you do have the option of being a 1099, you are going to be able to bring home more money. However, you have to know your strategy. The first thing that you need to do is you need to start an LLC. I like to say start an LLC because LLCs are flexible entities. You can pretty much start as an LLC, go over to an S corporation. You can go over to a corporation, and it's the only entity that can do that. You can't do that with a corporation, right? Corporation, you can take it from C corp to S corp, but you can't take it, from C corp to LLC. So what you'll do is you'll open up your LLC. What you're now going to do is now your expenses, right? You're now a contractor. So your travel to work that wasn't a deduction is now a tax deduction. Your phone, your laptop, all the things that you're spending money on is now tax deductible. So now it's a situation where you get to keep more money. Now, another thing that you get to do is you get to switch over that LLC to an S corp. So all my clients that come to me and they're like, Ms. Business, my job gave me an option to be a 1099 employee. Great, no problem. Accept it, right? But now that just means, you're going to be responsible for getting to work. You're going to be responsible for your, your schedule and your task, which is cool. But now accept it. Become a 1099 and now turn yourself into a business. Now you can do things like write off your home office. You can do things like utilize the Augusta rule because now you have a business. So now you need to have board of director meetings. You need to maybe shoot a commercial. Maybe you want to take it. Listen, this ain't my only client, right? You're now a business. They don't have to be the only people that that you work with. So now you're a business. You may need to do a commercial. So I always use the Augusta rule. Oh, my apartment, I got a beautiful apartment. When I tell you I utilize the Augusta rule
what is
down,
the Augusta rule?
So the Augusta rule is the IRS says that you can rent your home out to your business 14 days out of the year, tax-free, right? So what it means is that I'm in New York, I film my course, right? I film my course in my home, production company, everybody in my house. What happens? I didn't have to go outside and rent a space. I looked on Peerspace. What's a comparable rate? Once I look for that comparable rate, then I say, okay, well, I'm going to go ahead and, rent out my house. Well, I'm going to rent out that space. My house is beautiful. I'm staying right here. Yeah. And it makes it easier to get dressed, right? So what I'll do is I'll transfer the money. So let's say about $2,000, right? In New York to rent out for the whole entire day. It's expensive here. So let's say $2,000 out the entire day. For the entire day to rent. So basically what I'm going to do, right, guys, and pay attention because process is more important than knowing that you can do things. So what I'm going to do is I am going to say, all right, I'm going to transfer this money from my business account over to my personal account. I do that 14 days throughout the year, right? So whether I'm meeting with my board of directors, whether I'm shooting content, whatever it is that I'm doing for my business, it is necessary for me to do for my business. So cool, no problem. Now what happens is now it's time to file taxes. What's that process? Don't worry about it. You have to include it in your taxes, but it's not taxable income. So now it's excluded from your income. So now what happens is on my business side, I was able to take a $28,000 tax deduction. On my personal side, when it got over there, it's not tax deductible. So every year, without fail, I take my $28,000 tax deduction. You know what I mean? And then if you do it around a holiday in New York, everybody love to come to New York for a holiday. So what does that mean? The prices go up. So maybe at that point, I may be able to, do $3,000, So it when it comes to the tax code, it's all about you knowing what you can do, but also making sure that you follow the process. You're actually conducting business. You're actually keeping your documentation. You keep your records. Those are the things that's really, really important.
Mm-hmm.
So, yeah, I expect you guys to implement that Augusta rule.
For sure. For sure. Yeah, you can go ahead, bro.
Nah, that's a lot of game. And that kind of reminded me too, because back I know you probably definitely heard of back, like, he was all over the papers, Donald Trump, when people were flipping out. He never paid taxes for years, and everybody's in the comment, he needs to be in jail. But behind my head, I'm like, how's he getting away with this? But then I heard he does own some real estate and own some other things. But how do you feel like he can get away with avoid paying millions like that, or almost billions in taxes?
So let's be clear. Donald Trump is popular, so Donald Trump was the face of it. Wealthy people don't pay taxes all the time, right? They pay a low amount of taxes all the time because they understand the tax code, so they allow their movements to dictate the things that they do in order to reduce their taxes. So let's just talk about it, right? Let's just say I have someone that, let's say I have a client that has, since you want to use real estate, Donald Trump is more so in real estate. Let's say I have someone that's in real estate.
Mm-hmm.
But let's say they also they had business income, right? So they had business income. So now when they have business income, now you have this business income and now you have real estate income. Now it depends on how active are you in these businesses? So one thing to understand, guys, all income is not created equal. Are you actively working for this money? Meaning you paying the highest tax rate possible? Because that's all it means. You work more, you pay more taxes. Or are you working less, right? Are you investing? Are you not involved into the business that you have? And so therefore now it's a situation where that's considered passive income.
Okay.
All the incomes are created. They're like two total different buckets. So which means now you have to be able to understand how do I now that I have this, I don't know, give me a number that the business made.
100K.
100K.
You're thinking too small.
No. It could be 100K. It could be 100K.
All right.
The business made 100K. You're like, oh man, Miss Business, this is crazy. Like, if I gotta pay taxes on this, I live in New York. That's federal taxes. That's state taxes. That's local taxes. Because we live in a city.
Yeah.
You guys live in a city?
Yeah.
Yeah, I live in a city too, right? So now
Social
you
Security,
talking
all of that.
You talking a lot of taxes. So now if it's a situation where you have $100,000 in earned income, right?
Mm-hmm.
In your business, right? Now you have this real estate income. So now you investing in real estate. What can I do? One thing that you can do is you can say, okay, well, I'm going to use something called cost segregation because now I need something to offset this income, right? Losses offset positive, positive, right? We learned that in high school, right? Your negatives, your positives, right? Well, actually you learned that in elementary school. But one thing that I want to walk you guys through, right? And I'm going to try my best to make sure you're following me. I'm going to be looking at you guys' eyes to see if you're following me.
If I look this way, I probably got lost. I'm thinking about it too.
All right. So if you have earned income, basically you have income coming in through your business. Let's say you have $100,000. You now own a piece of property. You're like, listen, I am not paying the IRS. I need to purchase some real estate. I need to go through and I need to see exactly what it is that I need to do. That's what you call tax planning. You're sitting down before December 31st and saying, hold on, it's either I'm going to reinvest this money or I'm going to give it to the IRS.
Right.
So wealthy people, the Donald Trumps of the world, the business owner that we're talking about is going to say, yeah, well, you know what? It's December 31st. I mean, before December 31st, I need to make some moves. So now I'm going to purchase a piece of real estate. Okay. I may purchase this piece of real estate and the real estate may be, I don't know, let's say $500,000, right? The real estate value is $500,000. What happens now is that you get to do what's called cost segregation. But just be mindful that there's steps and things that you need to do in order to activate all the losses that you're going to receive. So now let's just say hypothetically you have a $500,000 house. Let's just say the land value is about $130,000. If you land is not cannot be depreciated. Right. So now if it's a situation where you now say, okay, well, I am going to take my depreciation on my building, right? I'm going to dissect my property because that's all cost segregation is. Instead of you saying, oh, the IRS said I can divide my property over 27 and a half years, what you're going to do is you're going to say, hey, I am going to dissect my property and really look at the components of my property. Because the IRS says, listen, land improvements, you can depreciate that over 15 years. You can depreciate personal property over 5 years. Why would I divide it my whole house over 27 and a half years? The more years you divide, what is it? Less, right? Yep. Look, I got y'all in school. Y'all not answering me.
Yep.
So that you're getting less of a depreciation, right? So you want your expenses. So what you're going to do now is you're going to dissect your property. So now when you dissect your property, you may say, you know what? My home, my building, right? Because that's what the IRS says, 27 and a half years for a building is really only worth $250,000. Right? While I may have my land improvements and my personal property, now I'm able to get a higher depreciation expense. So in that example, you probably can go from just being able to take a depreciation expense. If you divide it over over 27 and a half years, you're probably getting about $13,500 of a depreciation expense. Cost segregation, I could get that same person $76,000 of a depreciation expense. So now the person that's making $100,000, they do real estate full time. They're known as what's called a real estate professional. So once you're a real estate professional, what happens is you can write off, it's now looked at as your business. Right. So now one business income can offset another business income. So now that $100,000 just got reduced to $25,000 $24,000 because I just told you I can get you a depreciation expense of $76,000. So you guys following me?
So at first it would have been 100,000.
100,000. Come on, follow me with the numbers. I'm sick with the numbers.
Right, so 100,000. All right. So without cost segregation, how much would they be paying in taxes?
No, it's not about how much they'll be paying in taxes. Okay. It's about how much of a depreciation expense they'll be able to receive based on their property. So the depreciation expense, so let's say you divide the home after you deduct the land value, you're probably looking at a $13,500 expense. Yeah. So that means that would have took your income down to about $86,000. You would have still had to pay taxes on $86,000. But that's not good enough for me. Right. That's not good enough. Why not? Me. What you mean? Why not? I don't want you paying. You want to pay taxes on $86,000, or you want to pay taxes on $25,000?
I don't want to pay taxes.
What you want to do? Okay, so we're getting you there. Hello? Am I not trying to get you there? Am I not doing my job? I just got you down to $24,000 in income. So now, if I just got you down to $24,000, taxes on $24,000, you may be looking at about 15%. But don't worry, if you don't want to pay any taxes at all, we could do something. What else you want to buy? You want to reinvest in your business? You want to buy laptops? You want to buy a vehicle? What do you want to do? Because we could do it, right? We could do it, but it has to be done before December 31st. Okay. Right? So when you approach taxes in a space where it's like, I don't want to pay taxes, that's cool. And I tell people that all the time. It's cool that you don't want to pay taxes, but what are you willing to do? What are you willing to go invest in? What are you willing to go and purchase? Are you at a point where you're like, listen, I want to just invest, I want to invest in my retirement. I want to invest in assets. What is it that I want to do? Right? Because a lot of times people will be like, you're going to get to a point, right? And I wish this on everybody. It gets to a point where you cannot take any more tax deductions. You know how you're like, listen, I don't want to pay taxes. But again, doing these deductions is going to keep bringing your income lower. You may say, listen, Miss Business, I want a house. I want a house. I need to show so now I'm gonna be like, okay, well, if you need to show income, then what we need to do is you need to make sure that you're not spending up all your money, right? You wouldn't go out and purchase that home. You'll have to pay the taxes on.
Just bite the bullet.
You'll have to bite the bullet. And so many people are sometimes so focused on that, what they don't want to give up, in terms of what they don't want to pay, that they're missing out on all the things that they're going to gain. Right. So again, being a business owner is amazing, right? Because you have flexibility. You have the power to say, and that's what we strive for every day, right? We want freedom. We want power. We want the power to say, I want to do this or I don't. So you want to be able to say, you know what? I'm not going to exhaust all my money, and I'm not going to, reinvest into my business because I know that I need to show this income because I need to purchase this home. And that's okay. But the year you don't, guess what? It's up. It's business. What can I do? You may listen, maybe a retirement account. That's another thing that small business owners miss a lot. Reinvesting in themselves. No retirement accounts. We're going to be in trouble. When I tell you in trouble, listen to me. In trouble. Okay?
Why trouble?
Why trouble? Because we have all of these entrepreneurs and all of these gig workers, and no one's investing in their retirement.
Don't they say, like, I don't know, it's just conversations, but don't people say, like, it's better to do, like, invest into a life insurance so that way you don't get taxed at the end or something like that?
So you can invest now.
Question.
What I will say, and it depends on how much money you have, right? Because most people will say that, oh, take your money and invest it into an insurance policy that's going to build you cash value. That's great. I have an insurance policy that builds cash value and I utilized it. I pull money out of it for a real estate investment because I'm training myself to use other people's money always. I'm not using my money. How can I use other people's money to get this deal done? That's my mindset.
Right.
So before I dig in my bank account, I'm always going to be like, okay, what do I have that I can leverage so that way I don't have to use my money? And so one thing to note is that for you to start building cash value, a significant amount of cash value that's going to be enough for you to retire, that has to be a lot of money. You understand what I'm saying? So do people do it? Yes. But you also have to understand, is it right? And should it also be done in conjunction? And that's another thing. People have to start relying only on their job 401ks or their job retirement accounts, right? Because I have learned so much about insurance. So Lindsay and I, we do a bunch of classes. So Lindsay Smith, the agent, not sure if you guys are familiar with her, but that's my girl. She does all things insurance. And I have been learning so much from her. So do I think that you should have insurance? Yes. Do I think we need to understand how to utilize it as a tool? Yes.
Right.
But what I also know is that insurance is a part of the puzzle. It's not the puzzle.
Okay.
Right? It's not the puzzle. So yes, you can get an insurance policy and yes, you can borrow from it, right? And when you borrow from it, that then makes it, tax-free. But then again, it's also like MEC limits and all of the, there's so many different things. I got to get Lindsay on here so she could break it all down to you, right? Listen, I just know that I have to be educated and understand how is it a piece of my puzzle and how does it work from a tax perspective and help my clients long term. Right. So when people are just like, oh, that again, we have all of this misinformation being floating around where it's like, oh, just invest in insurance. Like, OK, well, how much is this insurance going to pay you? And how much do you actually have to contribute to this insurance for it to actually make sense? Sometimes it's a situation where insurance needs to be a part of the puzzle and not the whole puzzle. And so when I say we're going to be in trouble, these are the things that I mean. Right? Because realistically, as a business owner, what you can do is pay yourself a salary. You're now an employee of your business. Now what you can do is you can then, you know how you work and they match your retirement contributions. You can do the same exact thing. So you can have a 401k at your in your business. You literally can contribute to your retirement. And once you contribute to your retirement, you can have the business match it. So now you have a tax deduction. Now you have, retirement contributions. And the problem is that we so stuck in the hustle and bustle and I need to make it and I need to do it that you don't think about yourself. Business owners, we don't think about ourselves, right? We're always like, how can we serve other people? What can we do that we're not really thinking about ourselves? So yeah, I always implement it in my tax planning strategy because they won't say my accountant let me be poor. No, sir. No.
So in terms of like retirement accounts that could help you save on taxes, like, do you mean like you said 401k? How about a Roth IRA and things like that?
Roth
those help you?
Yeah, so Roth is good, but let me just explain to you guys the big difference between a Roth IRA, a traditional IRA, and the reason why, because most people are like, oh my God, invest into a Roth IRA. Like, it's so good. And
Yeah.
I think Roths are good. Like, I think they're amazing. But what I want to do is just clear it up so that way people understand what is the big difference between a Roth and a traditional IRA, and why is one tax, and why isn't one tax. Now, a traditional IRA, you invest in a traditional IRA similar to like with the 401k with pre-tax dollars, meaning that they allow you to contribute to your traditional IRA before you pay any taxes. So then they say, cool, listen, they going to get their taxes on the front, the back, they going to get their taxes, right? So with the traditional IRA, what happens is now you're contributing to your retirement account. So then when you take it out during retirement, then those payments are now taxable because they didn't tax you in the beginning. With the Roth IRA, that's done with after-tax dollars. So you can't contribute to a Roth with pre-tax dollars, because if you contribute to a Roth that's non-taxable in your retirement, what happens is that you have to do that with after-tax dollars, right? So I think that all retirement accounts are good, but it depends on where you are in your business. So if you're just starting out, I think solo 401ks are great. I think Roth IRAs are good. I think traditional IRAs are good. As you start making more money, then you're looking into SEP IRAs, right? It allows you to put a maximum of $69,000 in 2024. So now that allows you to put more in, but you have to be careful with the SEP. If you have any employees, you may want to stay away from a SEP because you have to contribute to the SEP at the same rate or percentage that you contributed to yours. You have to contribute to all of your employees at the same rate. So let's just say you give yourself 20%, right? Whatever you contributed was 20% of your salary. You also have to contribute 20% to your employee salary. You may not want to do that.
Right.
Or you may want to. You got to take care of the people that take care of you. Don't make your face like that.
That's true.
Right? You got to take care of the people that take care of you, but you may not want to do that. So then that's when you may want to go into a 401k. And 401k, I love for people once they're like, listen, that 69,000 is not enough for me to contribute. I want to contribute more. Now you're looking at, okay, I have a 401k plan, and now I can also do profit sharing to there, right? It's so many levels to this. Or you could do a defined benefit plan where you can contribute up to 250,000. Every single level as a business owner has a different investment vehicle, which allows you to invest and save on taxes. Right? So listen, I'm giving you guys a lot of game. You can go back and watch this at any stage of your business, okay?
And that's what I'm thinking too. I'm like, I don't know what she's talking about. What is a SEP? What's this?
I'm replaying.
I'm like, I know I'm gonna need this in the future for sure. So I'm like, let me ask what a SEP is. What's that? What's a SEP?
So a SEP IRA, it's an IRA account. So it's a form of a retirement account. But it just has different limitations where it allows you to contribute more. But as I mentioned, it just has the stipulation that you have to contribute to your employees at the same rate that you're contributing to your retirement as well. So that retirement account is really good for single owners or couples that are in a business, right? Because obviously if you're contributing to yourself, you don't mind contributing to your spouse at that same rate. So that's what the SEPs are good for.
Okay. So now you got a question?
Yeah. I was going to say, because they say the only thing promised is taxes and death. So if somebody dies...
Ooh, that's so true.
Yeah, no, that's really true. Bro.
That's the only thing guaranteed in life.
If somebody dies, right, and they owe taxes, who's responsible for it?
Oh, but they are. Their estate. They're still responsible. So let's talk about it, right? Because you have people like Prince. You have people like what's her name? Anita? No, not Anita Baker. What is the lady's name? Aretha Franklin.
Okay.
Right? You have Aretha Franklin. So back to your thing of, well, who is responsible? I want you to understand that if you owe taxes, like Aretha Franklin owed $8 million in taxes when she died. Aretha had no trust in place. Aretha had nothing in place. She literally had stuff stuck in a couch in terms of how she wanted her son to be taken care of and like how to distribute her assets. That's wild. To think that she basically had access to so many professionals, right? But it's not about, again, guys, it's not about knowing what you can do. It's about what you're going to execute on, right? So you have Aretha Franklin. She passed away. She owed $8 million in taxes. Guess what the IRS did? Knock, knock, knock to her estate. You guys can't distribute anything until we get paid first. So what they had to pay the IRS first, right? So let me tell you what Aretha could have done to fix that, right? Which is the same thing that Prince could have did, right? Prince died also, no trust, no nothing. He didn't have anything in place. So what happened there? His estate had to pay literally $130 million. And then the IRS came back and said, because now, right, we talk about taxes you owe when you die. We're not talking about death taxes. When you die, you also owe taxes if your assets are over a certain amount. Right? So all this wealth building, who's what?
Who's going to pay it?
Who's going to pay your estate before anything could get divvied out? Oh, you're going to owe. So let me break both down to you. So let's talk about Aretha Franklin, and then we'll talk about Prince, because then I feel like two different topics, but two very important things. So Aretha Franklin knew that she had $8 million tax liability. It was not going to disappear. So many people think, oh, when you pass away, this debt is going to disappear. That is not how it works. So she passed away. The IRS came knocking. Hey, we need to get paid. Now, what happens? The IRS needs to get paid before they can distribute anything. It could be so crazy that they can make you sell an asset in order for them to get paid. Because they're like, okay, well, how much are all the assets worth? The IRS don't care about just about your cash. How much assets do you have? Vehicles, homes, stocks, everything. They want to know, because again, if they owed $8 million, they want their $8 million before anything get distributed. Only thing that Aretha had to do before she passed away was Aretha could have just created a trust. Aretha could have gotten life insurance policy, could have gotten life insurance. She could have got life insurance, put it inside of her trust. So when she passed away, her estate would have, the insurance would have funded her, funded the trust. It would have went into the trust. She would have already known. See, most people think that trusts are created and that means that you don't have to pay taxes. That's not true. What happens is you sit down with the financial advisor, you have an understanding in terms of how much taxes you're going to owe. So when you have an understanding of how much taxes you're going to owe, you make sure that you have enough insurance to cover the tax liability. So if she was smart, right? Well, I don't want to call her not smart. I don't know what, her thought process was, but if she was being advised different, that's what I will say. If she was being advised differently and took that advice, what she could have done was put all of her assets inside of a trust. She would have known how much tax liability it was going to be due, and she would have made sure that her life insurance policy was going to cover that debt. Right? Because again, the IRS is going to get paid. It's just you have to be the one that pay them. Wow. 9 times out of 10, not. So that was the issue with Aretha. Now let's move on to Prince. Now, I know you guys are like, oh, shoot, there's death taxes? Yes,
that's
there's
what I'm thinking.
death taxes, right? They are called estate taxes. So what happens is when you pass away, if your assets are over a certain amount, I believe for 2024, it is $14 million. So if, your estate is over $14 million, what happens is that you have what's called death taxes. You owe based on that. So what happened was Prince died. Obviously, Prince has more than $14 million, right? So it actually was lower because it goes up every single year. So it was lower in I don't know when he passed away, but whenever Prince passed away, it was lower, but whatever. Let's just call the number. Let's just call the number at that time when Prince passed away. Let's just say 14 million. His assets obviously exceeded that. He had nothing in place. Nothing was set out. Now, what Prince should have done was, again, Prince should have put his assets in a trust. Prince should have gotten insurance. Prince should have made sure that, his insurance policies would have been able to take care of that. He should have made sure that even sometimes people make certain investments. Hey, I'm going to make this certain investment inside of my trust. I'm going to let the trust own it. So therefore, when I pass away, you guys now you can put it in your trust in terms of what you want sold. So now it's a situation where you can say, hey, I want these stocks sold. Or once you pass away, now that insurance money is going to go inside of the trust and it's going to take care of all of those bills. Makes right? Sense. So what happened with Prince was you pay taxes based on the value of your estate, right?
Okay.
Prince passed away. They paid the IRS 162 or 168 million. They came back and said, you guys valued this estate wrong. Y'all owe us another 68 million and 32 million in penalties and interest. So now they want another $100 million just because the assets of the estate was valued incorrectly. Wow. So again, if we're going to play this game, we need to understand full picture about what are the components, because we can do it, right? When I'm organizing and having tax plan conversations with my clients, we're assessing legacy plans. We're talking about, do you have a trust? Do you have it in place? Do you what's going on with your assets? Do you have a financial advisor? Do you have insurance? These are the things that you need to do in order to save on taxes. Saving on taxes is bigger than just, oh, I want a tax deduction, right? We going past that. It's about how can you invest? How can you leave this legacy? How could you not work your whole life building everything for it to be taken away by the IRS once you pass away? You have to do things the proper way.
So now, like, as far as growing, making money, building wealth, like, say for example, if you said Aretha Franklin, right?
Mm-hmm.
Say for example, if she still was alive, who would she want on her team? Like if she was building out like an entire team as far as wealth creation, wealth building, like
The
what's
same
some
people
of the
I have on my
go-to
team for
roles?
my clients. Let me tell you right now, you will need your CPA.
Okay.
You will need a lawyer.
What
right?
kind of lawyer? Any specific?
An estate lawyer,
Okay.
right? Someone that knows estate planning, that knows trust, right? That understands estate planning. You need someone in insurance, right? You need someone in insurance. You need a financial advisor, right? That's your team right there. That's your
top
team right
4.
there. Those are my top 4.
Okay.
Because your financial advisor is going to help you invest in the market and also going to analyze and be like, okay, if you're going to invest in real estate, okay, what other buckets of income are you going to, invest in? And then I would say that mentor, that wealth mentor, that financial mentor, right? That's going to be, and it could be in different buckets, right? Whether it's in business or whether it's in real estate, whatever it is, kind of figuring out like, okay, who's my mentor? Who's going to help me like generate all these assets? So yes, though, that's your team. And too many times we spend time trying to do everything. Let me tell you something. Look at me. I am horrible at investing in stocks. Horrible. I used to trade options when I was in corporate. I used to just sit there and like trade options. I should have been working, I know, but it is what it is. What I realized when it comes to stock trading, I'm not the best stock trader.
Right.
Because I know my personality. I want to hawk the stock. I want to see if it went up. If it went up, let me tell you something. My stock go up 13%, I'm selling it. You know why? Because that's higher than the industry average. They say 8%.
Yeah.
But that's not how you invest in stock.
But you making money, sis.
No. I am, but I'm also losing out as well, right? So yes, I could do that and I could play small. But what about the apples? What if I was investing in Apple in the beginning? I'm like, oh, I made my 13%.
Right.
Like I would have lost out. So for me, what I do is I hire a financial advisor. I hire a lawyer. I need contracts. I hire a lawyer. I think about my estate planning. I hire a lawyer. I need insurance. I'm going to Lindsay, right? Hey girl, hey, need insurance. Too many times we're trying to understand everything. I think we should understand the concept of things and how they work. But in terms of executing on them, hire somebody to execute these things for you. It makes life so much easier.
I agree. No, you go ahead. I agree because it kind of reminds me of a story where Steve Harvey, where he was on the podcast with EYL, and his accountant died. He was allegedly, I think they were filing his taxes, but they really weren't. After the person died, he ended up owing a few $1 million to the IRS. And it almost put him in some deep water. So like just knowing the concept versus,
you have to know.
I think knowing the concept and hiring the right person is the great combo right
Oh,
there.
absolutely.
Yeah.
And I always say, if you work with someone that's filing your taxes that cannot explain your taxes to you, like in Brooks Alliance, what we do is we literally walk through your taxes with you, like line by line, explaining to you, why are you getting a refund? Because just because you're getting a refund, that doesn't mean that it's great, right? You just gave the IRS an interest-free loan. Right? It doesn't mean that it's great because you got a refund. So did you get a refund and why? Or do you owe and why? And what can you do moving forward to actually put yourself in a better position the next year? So if you're working with a tax preparer, which kind of fall along the lines of, I see you in January through April. Hand me your documents. This is your refund. You guys know what I'm talking about, right? This is your refund. This is what you owe. Once you get a business, you cannot work with any accountant that is not a tax strategist, because they're not going to strategize for you. They're not going to be like, oh, you need to do this, you need to do that, you need to position it this way. They're just not going to do it. You know what I mean?
Yeah.
So
Nah,
I get you.
It's levels. It's levels. I hope after this conversation, you guys never look at taxes again. Taxes the same
I'm already
again.
not looking at taxes the same. I'm
Good,
like,
good,
damn.
good. That's what I like to hear.
But before we wrap up, I did have
Okay.
some questions.
Okay.
I was gonna say, what's the craziest thing someone has ever tried to classify as a business expense that you've done before? And he was like,
The
People be buying like
craziest-
bust down chains and stuff like that.
Yeah,
you
they
probably
do be
heard
buying
worse.
I have gotten that before. Oh, I got this chain and I got my company logo on it. I can write it off. Let's be clear. Just because you buy something and put your company logo on it, that does not make it a business expense, okay? Same thing goes with cars. Like people be like, oh, if I get this car and slap my logo and I
Yeah.
can write it
Yeah.
off on my bed. No, are you utilizing it for business? The IRS cares about how often you utilize it for business. So I think, I mean, I would say, I guess I guess I would say a chain or like, I'm just trying to think. I just feel like I know that there's something more outlandish. All right, we're going to go with a bust down. We're going to
Yeah.
go with a bust down chain that had their business logo on it.
Or how
I'm gonna
about
go with that.
vacations and travels?
Well,
yeah.
vacation and travel, you can write that off. I can tell you how to do that.
Yeah, some if you go on social media, you see all type of crazy stories, and a lot of people be.
What's
in
the
comments
story that
like,
you heard? And let me clear it up.
I think I don't really remember too much of the details, but
Mhm.
I think the person said they had a birthday party, and
Oh, I've
basically
heard something like that.
yeah, they had a
Invite all your
birthday party,
friends.
invited
Have a
their
little
friends.
mentorship.
They had fun on the
Oh, yeah,
weekend,
yeah, you can
and
do
then
that.
he wrote the whole thing off.
All right, let's talk about because you can do it, right? You
Yeah.
can do that. But basically, this is what happens. You have to have a business reason for your travel. You cannot, you can't pop up in DR and then be like, oh, I'm in DR. I'm gonna go ahead and like open my laptop and work. It doesn't work like that. Like you have to have a business reason for being there. So let's just say hypothetically you and all your high net worth friends, right? You guys wanted to get together and you wanted to say, hey, we're going to get together and we're going to mastermind,
Mhm.
right? That is a business reason for you being wherever you are. You guys got together, you guys mastermind. That is now you renting out the property is now, a write-off, you being able to write off, the food, all of those things. That is now going to be a write-off because guess what? You had to go there in order to mastermind. Everyone is in different locations. You guys pick the location, and that's a beauty. That is the beauty about being a business owner,
Mhm.
right? You get to personally develop. You get to professionally develop, and it's all a tax deduction, right?
Yeah.
When you go to conferences and they feeding your mind, and all of it is a tax deduction. So you go there to the mastermind. It is a tax deduction. So let's say you did that in the morning. Yeah, you would, and at night y'all hung out and y'all had fun.
Yeah.
They're still within the day. You had a fun.
Are you
had fun.
documenting all of this? Like
Taking
in a way,
pictures or something.
Yeah, so you would take like you don't okay. So in terms of the documentation, you need to have a record of in terms of what you're doing. The IRS cares about documentation. You can't say you did things and just be like, oh well. Imagine I always tell people this when you're creating an expense. Think about the fact that you are looking at like across from the table from an IRS agent, and could you confidently say to this IRS agent, oh, I'm in
Okay.
can you confidently look at this IRS agent and say, yeah, me and my friends, we flew out the DR and we just partied it up.
Yeah.
No, you have to have your business reason for being there. We had a mastermind. Here's the confirmation. Here's the Airbnb. Here's, everybody that was added to the invite. Here's the things that we discussed. So if there's like an outline in terms of, how the day went, you would, provide that. So those are the things that you would just kind of keep track of, right? So if it's digital, just put it in a folder. If you guys have it printed out, take a picture of it and hold on to it. So you can do these things, right? But it's all about the documentation and how you do it. Like you couldn't fly out on Friday, have the mastermind on Friday, and then also write everything off because y'all wanted to do and party on Saturday. It don't work like that, right? Because you did it in the morning and you did it at night, it's fine. But you can't do it. You can do it on Saturday. It don't work like that.
Makes sense.
Nah.
But in like last question in less than 2 minutes that you can probably explain it. When is it like a smart idea for a business owner to say out, all right, take it a step back. When is it like right for a business owner to say, hey, listen, it's a smart thing to go out and get a business loan? Like,
when they need capital.
mm-hmm.
You could start your business, and I think that we have to structure our minds more to use other people's money.
Mm-hmm.
So I love debt. Debt, when you get it and it hits your bank account, it is non-taxable. When you pay it back, guess what? The interest you pay on it is a tax deduction. Right? So I love debt. You just have to understand how you're going to use debt and have a clear plan on how you're going to utilize that money and how it is going to provide a return for you in your business. Too many times people don't have a plan. They just
That's true.
oh, let me get this money. Whoa. What are you going to do with this money?
Right.
What are you going to invest in? You need to quantify it. I'm going to spend $30,000 in ads. This $30,000 is going to generate me, $13,000. Let's say if it's like this, it's going to generate me 13,000 new clients, other 13,000 clients. I'm going to get 500 of those clients to purchase with me. And then that is going to be able to quantify it. Now, this is the amount of every single product. So now it's a situation where now you're able to justify it, right? Because now it makes sense. But you can't just go out and be like, oh, okay, I'm going to just, you can't do that, right? You can't do that. So that would be my advice. Like, you got to make it make sense.
You guys heard it from the CPA herself.
Man, this one episode, bro.
Listen, I'm just trying to tell you, I could go on forever.
Yeah, definitely could. Part 2, you think? Yeah.
Listen,
a few months from now.
Let me know.
Let
me know when tax season come out. I'll pull up again.
Oh yeah, that's
when tax season come. I'll pull up again. We'll talk about. But it's gonna be good because once the election come, Trump, Kamala, depending on when they get in office, they're gonna start changing tax laws. So we're gonna talk about what that is. All right. So
stay tuned, y'all. Stay tuned. Stay tuned. You see me kicking my feet. All right, cool. So this is another episode of Motion and Success. What's your Instagram handles and how can the people find you?
Yeah, so my Instagram is Miss Business, so ms.business101 on Instagram and TikTok.
Websites?
Oh, my website is missbusiness101.com. I kind of keep it really consistent.
All right, cool.
Y'all know where to go. And I see you got the books here too.
Oh, yeah. So these are my books. So 300 plus tax deduction. Number one question I get all the time. What can I write off? So I gave you 300 things that you can write off. 300 things or more. And this is the tax playbook. The tax playbook is perfect for understanding all the questions you need to ask. So you guys see how I've been breaking down all of these strategies. And this literally breaks down all the players of your team because I structured it like kind of like a football team. Like I kind of structured it like that. Yeah. So all the players of your team and what you need in order to save on taxes, questions you should be asking, how to file your taxes. So that's the tax playbook. So make sure you guys get both of my books. Click the link in my bio. You'll get it right there.
Thank you.
Sure. Right. We're going to drop it in the description as well. But this was really good.
This was a real good episode because a lot of times people are tagging attorneys. They're tagging CPAs. They're tagging everybody. They're saying, oh, this is cap. This is this. This is that. She is the facts. Okay.
Right.
All right, cool. So go ahead, like, comment, share, subscribe, and stay tuned for the next episode. Have a good one. Peace. Thank you.